Welcome to another episode of Stock Talk, where we unravel the complexities of Wall Street's most fascinating players. Today, we're diving deep into Palantir Technologies, a company that's as exciting as it is volatile. With the stock dipping 4.86%, let's explore the current narrative, what's driving the valuation concerns, and why this roller coaster ride might just be an investor's dream. When you hear 4.86% drop, it's easy to panic. Cue dramatic music and stock market memes about falling knives. But let's take a step back and breathe. Palantir isn't sinking, it's navigating some choppy waters. This dip is part of the volatility baked into high-growth stocks. Palantir's sharp rise in the past year, over 340%, has put it under the microscope. So, a little turbulence isn't just expected, it's practically guaranteed. Think of it as a jet ski hitting a few waves, not ideal, but still a thrill ride. The age-old question, is Palantir overvalued? At its current price, Palantir is commanding a premium, and for good reason. The company has emerged as a leader in AI-driven data analysis, which isn't just a buzzword, it's the backbone of industries from healthcare to defense. But here's where the critics step in. Analysts argue that the stock's valuation has raced ahead of its fundamentals. Imagine paying for a Ferrari when you've only test-driven a Toyota. Sure, the Ferrari might be worth it in the long run, but you're still paying a hefty price up front. Despite the scrutiny, Palantir is delivering results. In Q3 2024, the company posted a 30% revenue increase, driven by its AI-powered solutions like the Artificial Intelligence Platform, AIP. Palantir's growth story isn't just about numbers, it's about real-world impact. From helping governments manage national security to enabling Fortune 500 companies to make data-driven decisions, Palantir's software is becoming indispensable. Imagine you're building a house. Palantir is the architect, the blueprint, and the construction crew all rolled into one. That kind of value doesn't go unnoticed. Let's talk about Morgan Stanley. The investment giant has been sounding the alarm bells, cautioning that Palantir's current price might be unsustainable. They've set a $60 price target, which implies about 20% dip from current levels. On the surface, this sounds like bad news, but let's flip the script. For investors, this kind of caution can actually be a buy signal. Why? A pullback could bring the stock's valuation closer to its fundamentals, making it more attractive to value-conscious investors. If Palantir hits $60, it could create a perfect entry point for long-term investors looking to ride the next wave of AI adoption. No stock is without risks, and Palantir is no exception. Here are a few factors to keep in mind. Palantir's reliance on government contracts means it's susceptible to changes in administration and policy. A budget cut here or a cancelled contract there could impact revenue. As the AI space heats up, competitors are gunning for Palantir's market share. Companies like Snowflake and Salesforce aren't sitting idle. If growth doesn't keep pace with expectations, the stock could face downward pressure. By the way, if you are benefiting from the content so far and want more like this, hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you've commented, let's continue. That said, these risks aren't deal breakers, they're challenges to navigate. At first glance, Morgan Stanley's $60 target might seem like a slap in the face. But let's put on our optimist hats. Here's why this is actually a positive development. Conservative estimate, Morgan Stanley is possibly known for its cautious approach. If they see $60 as a reasonable target, it underscores the stock's resilience even in a worst-case scenario. A dip to $60 would give investors a chance to buy into Palantir at a more attractive valuation, setting the stage for future gains. Despite their cautious tone, Morgan Stanley possibly acknowledges that Palantir's growth potential could justify its valuation. That's a big vote of confidence. Think of it like this: if someone told you the price of your favorite gadget might drop by 20%, would you stop liking it? Probably not. You'd wait for the discount and snag it when the time is right. Let's break down Palantir's story with a few relatable examples. Palantir is like a Tesla Roadster, cutting-edge, powerful, and priced at a premium. Some buyers hesitate at the sticker price, but those who take the leap often find it's worth every penny. Palantir's software is like a Swiss Army knife for organizations, multifunctional, indispensable, and ahead of its time. It's no wonder governments and corporations alike are lining up to use it. The AI boom is the 21st century gold rush, and Palantir is the company selling pickaxes. They're not just mining AI gold, they're enabling others to do so too. For all its volatility, Palantir remains a long-term play. The company is perfectly positioned to capitalize on the AI revolution, and its unique combination of government and commercial contracts provides a solid foundation for growth. Let's not forget the big picture. AI adoption is accelerating. As more industries embrace AI, the demand for Palantir's solutions will only grow. Palantir is expanding its footprint beyond the US, tapping into new markets and revenue streams. From AIP to cutting-edge analytics, Palantir continues to push the envelope, ensuring it stays ahead of the competition. So, where does that leave us? Palantir's 4.86% dip in valuation concerns are part of the natural ebb and flow of a high-growth stock. While analysts like Morgan Stanley urge caution, the company's impressive 30% Q3 growth and leadership in AI-driven data analysis paint a compelling picture. For investors, this is a story of calculated risk and high reward. Palantir might not be for the faint of heart, but for those willing to embrace the volatility, the potential upside is enormous. Remember, greatness isn't built in a day. Palantir is a marathon, not a sprint. And for those with the patience to see it through, the finish line could be nothing short of spectacular. Investing in Palantir isn't like buying shares in your average company. It's more akin to joining a movement, a bold bet on the transformative power of AI and data. This isn't just a stock, it's a stake in the future of decision-making, whether it's at the Pentagon or a Fortune 500 boardroom. Let's dig deeper into Palantir's positioning. Palantir's contracts with the US government and allied nations aren't just lucrative, they're a massive vote of confidence. These partnerships prove that Palantir isn't just a flashy tech player, it's a trusted partner in critical operations. The 50% growth in US commercial revenue in fiscal 2024 isn't a fluke. It's the result of companies recognizing the value of Palantir's platforms to improve efficiency, cut costs, and gain a competitive edge. Let's circle back to that Morgan Stanley $60 price target. Yes, it implies a potential 20% dip from current levels, but let's look at it in context. The skeptical analyst syndrome. Analysts are like weather forecasters. Back in mid-2024, many were cautious about Palantir's trajectory. Fast forward to the end of the year, and Palantir was the S&P 500's top performer with a 300% gain. Missing the mark this time isn't off the table. Remember, stock prices don't move in a straight line. A temporary dip can often set the stage for a strong rebound, especially if Palantir continues to deliver on its growth promises. As an investor, think of these downgrades like speed bumps. Annoying? Sure. But they don't stop the journey, they just slow it down temporarily. It's our privilege that God, the creator of heaven and earth, will bless us abundantly, make us the head and not the tail if we love him and obey his commandments. Please acknowledge him in your plans and he will direct your paths. Proverbs 3 verses 5 to 6. Want more information? Check the description section. Alright, beloved friends, that's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. There are 3 more important steps to build wealth. First, like this video, subscribe and then turn on the notifications bell. If you do this, you highly motivate me to continue bringing to you educative and transformative videos every week. Do not miss out on our future videos full of knowledge and wisdom. All I am asking is your subscription. Thanks for joining us today, your support is appreciated so much. Do not hesitate to share this video to help someone. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Thank you, see you in the next video by God's grace, we love you, and blessings to you.